How's it going? It's Rocky. Welcome to week number 15 of the $2,000 weekly challenge. Before we get started, please check out the timestamp on the description below so you're able to jump to the section that you're most interested in. It's broken up into the 4 sections, which is the intro, the account statement review, our best trade of the week, and our worst trade of the week. So every Friday, we release content from our experience trading the E-mini futures. Mostly, our focus is on the Dow Jones Industrial Average, which is the YM. Our goal with this challenge is to earn an income of $2,000 every week through a common strategy utilizing the MACD and the stochastic RSI using a time-based chart, which is a 5-minute chart that you see on the left here, and a tick-based chart, which is utilizing 512 ticks, as you can see on the right here. Tick chart is utilizing Heikin-Ashi candles. So I've changed the colors to red and white so I don't confuse it. While on the left, our time-based chart is using regular candles. Details of the strategy I'm using can be found on the description below. And also I mention it through most of the examples on the content that we've released so far. Keep in mind that what I'm doing right now isn't necessarily the right or the wrong way of doing things. It's just something that I'm comfortable with. It's something that I've back tested and I try to improve over time. So my best recommendation is that you should also develop your own system. Either, you can base it off of mine or just take tidbits from something that you like from what I'm doing. And by the way, FYI, I have no chat room and I'm not selling a course. Really, I'm doing this because I'm enjoying sharing my content with everyone and learning from their community. For example, someone that I've been talking to on YouTube, he's been commenting a lot on a lot of my content. I do appreciate that. Shows that you support and you do value what you've been seeing on my content so far. This is from Glenn MC. He made some suggestions on changing some of the settings that I have for the stochastic RSI and on the MACD. So if you check the link above, I do have a content I have of how to set up my charts. And the studies I'm using is really just the standard ones, as you can see here. So he made some suggestions on some changes to it. So I am back testing that right now. So I'm going to show it to you right here. And I added the settings that we changed for the stochastic RSI. So, the regular was 1480-20. I changed it to 1280 and 20. And then for the MACD, I'm using just the standard 1226.9. I changed that to 613 and 4 based on his recommendations. And it's just something that I'm backtesting and looking at right now. So I haven't actually done an actual trade. And I'm actually, when I'm ready to try to utilize this, I'll probably be doing it on a micro. But at this time, I'm just reserving it, and I actually don't have enough cash to do additional micros to the 2 E-mini that I'm currently doing. So definitely on the observation stage. So I appreciate that, Glenn MC. And if anyone out there, if you have any, suggestions that you may have, please let me know. It'll help me and it'll help whoever else will be reading that comment. So for this week, I am glad to say that we did meet our minimum goal of earning an income of $2,000. We actually did quite well this week. We made $3,047. And from the past 15 weeks, it's actually one of our best weeks. Previously, I've made more on previous weeks, but that was a mixture of either some equities that I had from over a year from back in the day when I was day trading stocks, or just basically returning from a huge margin call, some contracts that I had open. But I would say this was a very solid week. We made $3,047 this week. We had our best day on Thursday being 1,072. So we hit a rack, which I'm quite happy with. And then our least productive day is today, Friday, with just $139. So if you look at our statement here, as you can tell, the first 4 days, we actually didn't lose anything other than this $500 mark to market that occurred on Wednesday, which I'm actually going to talk about on one of our worst trade for the week, because that is our biggest loss. $500. And basically our biggest gain was $620 from one of our trades on Monday. So that was a great way to start the week itself. And as you can tell, I do have a negative 2,000 here, which is a withdrawal, and another negative 1,000 here, which is another withdrawal. So I did 2 withdrawals this week for a total of $3,000. So that's more than the usual 2,000 I like to withdraw. But quarterly taxes and other bills that has to be paid, so I had to take a little bit more cash to help out with that one. So something like we always do, we calculate that and show you exactly how we came up with our gain for the week, which I am doing based on our cash balance. So we ended the week at $24,118.22. But we did withdraw $2,000 on Monday, so we're going to add that back. And we withdrew another $1,000 on Wednesday, so we'll add that back as well. And our starting cash is $24,071.22. And that gave us a total for the week of $3,000.47. And something I always like to do, just to, put it in relative terms, I divide this by 40 hours, so compared to if it were a 9 to 5. So something different with the way I'm day trading is I'm doing it to replace daily income. So it's a little different from other content you see where, you'll see big to the moon type gains. So that's not what I'm trying to do. I'm just doing it one day at a time compared to a daily income. So to compare that, if I were to divide that by 40 hours, for this week, my rate was $76.17 per hour. So I am quite happy with that hourly rate. That is around what I used to make when I was working previously. So I'm quite glad that, we are at that level now. So this was actually our best trade of the week. And we opened 2 contracts at 33,576. And just visually to help us see exactly where that is, I'm actually going to draw a white line. And as you can tell from this trade, it's a little harder to see. So let me just move this vertical line to the side a bit. So if you look at the candle here, you can see there was a bit of a price rejection on the top. So I was actually in quite of a bit of drawdown on this entry. So I would say this was a bit of an aggressive and sort of a bad entry because I was just basing it off on the candle itself. But let's move the vertical line so we see what we're looking at here. If you look at the MACD itself, yes, the histogram was starting to converge. And you can tell by it changing from a bright red to a darker red in there. But at the time of it trading, this line was actually a lot closer to that MACD line. But, with the MACD being lagging and it being changing it's a data that aggregates. You don't actually see what I was seeing when I did enter this trade. But, it was actually a decent entry. But as you can tell with my entry up there, I had a bit of a drawdown for the next 20 minutes. Break even at one point, and again a bit of a drawdown. So it was an aggressive entry. And if you look on the right side here on the equivalent tick-based chart, there really wasn't much there that told me I should enter other than the stochastic RSI going on to the overbought side. So I would say it's a bad entry that I really based off of the candle itself on the 5-minute. Yes, it turned out to be a good trade, but ideally, if you look at it, if I waited until 11:25 instead, when the actual crossover occurred, that would have been a better entry on my part. And, I would have been, I could have entered at a lower price point. And if you look at the equivalent tick-based chart at about 11:25, that's also around the time when crossover occurred itself. But this trade was a pretty choppy trade, but I stayed patient. A lot of that was because I was looking at the 1-hour chart, and it ended up being quite profitable towards the power hour here. As you can see, this big candle at 12:20 p.m. And for this trade, let me just bring out the calculator to make it easier for us. We closed the contract at 33,638 and we entered at 33,576. So that was a 62 tick move. And since we have two contracts and one contract of E-mini is equal to $5, that was a $10 move. So times 10, that was our best trade of the week, which was $620. Our worst trade of the week occurred on Tuesday, actually during power hour itself. And it's a little harder to tell from the zoom out version, but if you can tell here, like in my most content, when I enter a contract or open a contract, I denote that by a blue line. And at the end of the contract, if I was long, I denote that by an orange line. Or if I was short, I denote that by a blue line. So you can see this is quite a big gap that I have here. And I'm going to show you exactly why this was a bad trade. So I'm going to zoom in on that trade. And I am going to zoom in on the equivalent on the other side, on the tick-based chart. So on Tuesday, we were actually doing quite well. We were close to hitting $1,000. And because we were close to hitting $1,000, I think just that mental hump of me trying to reach it ended up causing me to do a trade that I normally wouldn't have done. I could have called the day on my last trade at 11 o'clock and be done with it. And then I think I was up about $700 or so at that time. But because, I guess it's a bit of a, hey, if I held on, from 508, I could have gone all the way up to 608, and that's $1,000. I think I was having a bit of a FOMO that I missed out on $1,000 gain if I had held the trade longer. I ended up adding another contract during power hour, which I shouldn't have. So this was the one I consider this a bad trade because I was trying to chase $1,000. And the only reason I entered it is if you look at the MACD, I saw two consecutive bright green triangles, two consecutive bright histograms, which means that the two lines were starting to diverge. So it was very bullish. Stochastic RSI, we were on the overbought side, but something to look at is we've been on the overbought side since at least 10:30 in the morning when I entered at 12:05. So that was quite a bit of time. And if you look at the equivalent tick-based chart here, it was all a good move. It was textbook move with the histogram also diverging, and we are on the overbought side. But the problem here is that the crossover occurred a long time ago. The crossover occurred at about 10:08 on the tick-based chart, and on the time-based chart, it occurred at about 10:25 a.m., which was, that previous trade that I did, which did quite well. And because of that, the entire power hour itself, it actually kept going down, and I went through that phase that I go through sometimes where I'm like, I missed out, and I don't really want to give up this gain. I'm just going to stay patient, even though all the signs were saying that it's bad. And because of this, I actually held on past the mark-to-market. So mark-to-market occurs at the price at 1:15 in the Pacific time. And that's why we saw a $500 loss on our account statement. So I consider this a bad trade because if you look, I entered that at 11 o'clock, but I didn't leave it until 6:30 in the morning the next day. So for most of the night, I was actually just monitoring this, waking up every hour to see how it was doing. So I was losing a lot of sleep, which is bad. And in a way, it's a lucky trade. So even though I had a mark-to-market loss of $500 with my entry at 620, I did exit at 649. So that's a positive of 29 points, which is $290. And if we zoom in a little bit on that, that at 6:49, it was right here. So and I did this via my mobile phone. So I wasn't on my computer. It was like early in the morning. I'm looking at my phone. I don't have all the data with me, but I just wanted to get out because I was down almost $1,000 from holding it overnight. And I just wanted to break even with a little bit of profit, and I wanted to get out. But if I had my computer and I had a lot of sleep and I was looking at this a lot clearer with my computer, I could have held on and, ride it to at least maybe 750 or to the peak here of about 790. I could have made more, but it's okay. I was exhausted. My brain wasn't working. And that was actually the main reason that for this trade itself, I stopped trading for the whole day on Wednesday. I took a break. So if you can tell here, I did no trading during the US market time on Wednesday and none during Globex. So something I'm trying out more now, which, something I should really be doing, is optimizing my time and really focusing on the US market and less on the Globex, and really get that 8 hours of sleep or more, because that is quite important, that when the market opens, you are ready to go, you have a fresh mind, and you won't be making silly mistakes or trading from your cell phone, which is, you're going to miss out on a lot of that. But anyway, hope you enjoyed the content that I showed you this week. Hope you learned something. Please do subscribe if you haven't. And if you didn't learn anything, please give me another chance. And hopefully in the next content, I'll convince you to subscribe then. All right. Have a good one. See you next time.